So it is August 7th, it is a Wednesday, and after I show you the account and what my positions are doing, I want to talk a little bit about the silver market and the um, spike that it's experiencing right now at this very moment. And I want to talk about the miners and how they're a little bit leveraged and it's a good way to profit off of the move. And that's about it. And its relationship with the commodity index, overall commodity prices around the world, and stock market drops and things like that. All right, so I'm gonna go into the account real quick. Um, I'm sitting at 59,900. I did put $1,000 in there, so it would have been 58,937. So keep that in mind. Um, so my options are not doing too hot at the moment, but hopefully as the market starts slowly picking up, my options play will start reducing the liability, and everything will turn out for the best. C-SPAN has been a surprise move up, considering it's in the Asian side of the world. It's a shipping containing leasing company, and I have sold two calls against the shares that I was forced to buy at $10, and it's hovering around $10 right now, which means if it sits at this very price up until when's it expire, the 16th, I'm going to be just collecting these $25, and that's it. It's going to be great. And then I'm going to open up another options contract. In a previous video, I showed you how much money I've actually made doing this with C-SPAN. And I was making money like that from Chemical as well, and from other companies. But Chemical, as of late, has refused to rebound because uranium's been so weak, sitting at 872 right now. My trading range is around $10, as you can see right here. So I've been selling puts and calls around that range to profit from the time premium. But now I actually have $578 of liability, and that's not too good. Total return is minus 150%, $347. So right now I have $4,600 in collateral, 300 shares in collateral. Total shares owned is 500. Then now statistics. I'm going into something more fun, which is the silver and gold miners, which today should have experienced a stronger move. Wheaton Precious Metals is sitting at $27 right now. It's been at this level before, just not too long ago right here, 27.40 on July 22nd. And the silver and gold price is actually a lot higher now, and which is kind of a worrying sign. And this is the mining stocks have been acting kind of weak relatively to the price. The price has been absolutely exploding. Gold's been breaking through all kinds of resistances, and now so is silver is breaking out and trying to spike again. And I think this might be one of the rare scenarios where, at least I'm betting on it, that is going to be the rare scenario where the metal actually leads the price of the stocks, and then they're going to have to play catch up. Because it seems like the stocks want to go down. Like I was watching the metal price today, I was going up. Gold was going, over 500 and 501, 502, 503, 504. And the mining stocks were actually trending down, forecasting a correction in the price of the metals. Usually the miners operate in this way, they forecast. But I think this might be one of the rare occasions where the metal eventually is going to be pulling the miners up. It's very, very, very favorable environment right now for the silver and gold miners. I mean, it's ridiculous because you got oil at a really low price, and that's one of their costs. So the cost of the miners is reduced. Then we have their product prices increased. So, I mean, that makes for a huge explosion in margins, right? So in the next couple quarters, we should see huge profits from these companies. I mean, their earnings should just be astronomical if they're using this price strength to sell some of their material, hopefully unload a large position into the material. And we'll see who actually does the best in managing their finances here, who's picking their sell spots the best. But it should be a really, really good environment, especially if it sustains, right? So if this environment sustains for days, for weeks, for a couple months, I mean, those are going to be huge profits. So every day right now, they're just printing money. I mean, literally and figuratively. They're printing they're printing money right now. So I'm expecting big things if this dynamic continues, and it's a very rare dynamic. Doesn't happen very often. For like 95% of the miners' lifespan, they're under huge distress and they're trying to always cut costs and survive. But now is the time to shine. Okay, I'll stop with the puns. I actually didn't mean that one. Pun not intended. So another dynamic that I want to show you here is silver is not a main asset that's mined. It's usually a byproduct. Like the vast majority, not vast majority, but a big majority of the metal is not from primary silver producers. So it's kind of a unique metal. And so I've discussed this in other video logs, but I'll quickly mention it here, is that since it's a product, whenever mining is decreased for things like copper and other base metals, then the supply of silver is cut. So ironically, as commodity prices go down, silver tends to go up because the demand is the same, right? The demand hasn't changed, but the supply is decreased, and therefore, if you know your economics 101 supply and demand graph, the price has to rise. So here we have rising silver prices and falling commodity production, right? And commodity production usually falls because the economy slows down after things like market crash or whatnot. Commodities have a really big dip because it's assumed that there's not going to be much demand for it since economies are in distress. And I'm going through it kind of quick because there's a lot to say and I want to get it over with. But that's the explanation there. So I want to show you now the examples. And this is as quick as I talk. I mean, I'm not a very quick talker. So I want to show you some examples here. So I want to go to the a commodity index of some sort. How about DBC, commodity index tracking fund? And let's take a look at the 1 year here. You can see how it's minus 14.8%, more like 22% off of the October 3rd high there in 2018. And now it's pretty much down to the lows. Even if I pull out to the 5 year, it's almost at its all-time low here on January 2016. But let's look at the year chart. You can see how it's minus 21% off of this high here. And this is the commodity. But if we take a look at silver, if I go to SLV here, which is an exchange traded fund that tracks the price of silver, and if I pull out to a 1 year chart, look what we see. Right? Let's see, October 3rd. It was 1378 minus 4.9%. So it's plus 15% as opposed to minus 21%. And look at this spike at the end here, right? If we go back to the other chart, you see a spike down. So now commodities are crashing at this very moment as silver is going up into the stratosphere, right? It's having an inverse effect. And the market crash, the worries in China and global markets and the US market sharp downturn is causing just this type of behavior. It's a question of like what's wagging. Is the tail wagging the dog or the dog wagging the tail when it comes to commodity markets? But nevertheless, the fact is that they're going down and silver is traveling inverse, even though it's a commodity itself and it's part of the index itself. But the base metals and other commodities overwhelm that. All right, so that's silver. And if I go to gold here, which is GLD, is just another ETF, exchange traded fund that tracks. You can see how since October 3rd, it is up over 24%. So way more than silver. I mean, gold just crushing it. Although gold doesn't necessarily benefit from the same dynamics that silver does when it comes to the commodity action. Gold is usually a metal that, first of all, doesn't change in supply all that much because only 1 to 2% of its supply is increased every year from mining production. So that's a different dynamic altogether. And the other dynamic that's different than silver when it comes to the supply side is that it's mainly mined through primary gold production mining companies. All right. So it doesn't necessarily benefit from the same effect that silver does. Now, that's interesting to note. And so gold miners are also they're also benefiting from a low oil price, and and now that the dollar is actually weakening against other currencies as well, U.S. based work labor type of companies should be benefiting. I think Newmont has some in Nevada and stuff like that, so they should be benefiting a lot more. And let's take a look if it's benefiting more than normal miners. And I think it is. Today it's up 3.42. If I look at a 1 year, let's actually go more recent here. 3 months up 28%. And if I look at the GDX, which is a total kind of a market capturing, it's 41%. Okay, so let's see. NEM 41, 3 months. So it's not benefit as much, maybe because it's such a large producer. Let's compare it to Barrick Gold. Whoa, that's not what I wanted. ABX. Okay. Bitcoin Gold. They don't have ABX anymore. It's GOLD, but I'm gonna have to type in Barrick. It doesn't want to get out of here. Barrick Gold. There we go. 3-month performance. All right, it's about in line with the GDX. Anyway, but as currencies weaken around the world, then the cost of labor also weakens. Also goes down in price, right? It goes down in price, purchasing power. So you're able to purchase more labor with less money, and now you're able to purchase more oil with less money, and the price of your product is going up. So they should be just exploding astronomically up, and they kind of are, but it kind of not. So there's two options here, either, or maybe more than two, I don't know. Either the gold miners, investors who are usually right, they're predicting that this price is unsustainable and will quickly correct down once whatever issues that are causing it to spike up are resolved. And that's why they're not rising as astronomically higher as they should be based on this gold price at this moment. Or, I mean, either they're right or they're wrong, right? Or the gold price is rightfully rising, and its price relative to the currencies it's being measured to in virtually every currency, by the way, is sustainable. Then what's going to happen is the stock price will only appreciate once investors actually see the returns in their financial statements and take a look at how much money these companies are actually making right now, and they just won't resist. They want a part of that pie. I mean, if something's so overvalued, it's like something's making you $5,000 a month and it costs like $1,000 to purchase. I mean, you're gonna buy it, right? Even if it's for a short period of time. So investors are just gonna pile in because it's a good idea, and that might be what triggers that like final blow off top in the mining sector. So I'm very curious to how this transpires. I personally own some gold miners and silver miners. Wheaton Precious Metal is the only one that I have in this account, because this account is more focused on profiting from a sideways market, which is kind of what I'm into right now and how I want to get to $1 million with this account. But so unfortunately, I've sold out of the XK for profit and of Wheaton Precious Metals for profit, and only have a small position of Wheaton Precious Metals in this account, and I'll show it to you. Well, I already showed it to you, but here it is again. Only 33 shares, about $891 with a cost average of $16.95. Right now it's 27. So up almost 60% on this position. I sold, I think, most of it around up 45 or some percent. So through a call option. Well, actually, I can take a look right now. I sold it at $24. Call assignment. Right here. Collected $2,400. and I don't know how much I profit. I think like $600 or something like that worth of profits. Wasn't bad. Okay, so that's my little explanation on the gold and mining sector. I've followed the sector for a really long time, and I've traded EXK on the up and down a lot, been scaling in, scaling out. I've showed a couple of the cycles already doing this and making money off of that in these video logs, and I'll probably continue to do that, but right now it's going a little bit parabolic. Silver is anyways, and I'll see how this plays out, and once the mining companies crash back down to earth eventually, whether that's in 2, 3, 5, 6 months or maybe a year, then I'll try to start scaling in and scaling out of EXK again, because I just know the company. But right now, when these prices are going a bit crazy to the upside, like, by the way, I did predict that. I go back to the videos and I discussed silver and how I think there's going to be a break. I mentioned how I'm looking for a breakout to the upside for the metals, and I should have profited more than I did off of that, but I'm still happy about it. I haven't totally missed out on the opportunity, but anyways, if I had more conviction, I would have made a bigger bet. Excuse me. So anyway, what else I want to show you? Oh yeah, I have about $3,000 worth of cash right now sitting waiting to buy stuff, and I have $5,000 worth of PCY, which is emerging market sovereign debt, and I can sell that $5,300 worth. I can sell that to buy additional stocks when I see opportunity. I'm still looking for cool brands to buy. I did sell a put against HBI, but actually appreciated through this crash that we've had, and now I actually made sure to, here it is, to cash in on that position, and so I bought it back for 10. So I sold it. Okay, maybe I didn't make any profit on that, but I needed the money because this is a margin account and I want to make sure that I have some cash. So I pulled out of that trade. I think even I didn't lose or make money on that, but in any case, I'll be looking to get back into HBI if I can. I think Champion brand, been noticing, is getting a little bit of popularity, and Haynes might benefit from that marginally, so we'll see. All right, that's about it. This is the state of the account. I just want to talk about the silver and gold miners, and I do have a target for silver. It's $18 right now. I could go over that, but I'm not really thinking of even selling my wheat and precious metals until it hits that $18 mark. And once it does, I think I'm just going to clear the position, and I'll let silver run as high as it wants until it decides to correct back down to the $13, $14 level, or even 15. Okay, I think that's about it. I've talked enough. This has been a long video. What the heck. All right, that's about it. Good luck, y'all. Hopefully you're making way more money than I am in this market, and good luck to y'all. Peace out.